Greetings, fools. I'm Asit Sharma, Senior Analyst and Lead Advisor at The Motley Fool, and my guest today is Will Lopes, CEO of Catapult Sports, which trades on the Australian Stock Exchange under the symbol CAT. Catapult Sports is a software as a service company that offers data analytics and sports science platforms to athletic teams worldwide. The company has a market capitalization of close to $680 million, and it's projected to grow 2026 revenue by roughly 20% to $140 million. Will Lopes, welcome to The Motley Fool.
Thank you. It's nice to be here.
Great to have you. Will, I wanted to begin with Catapult's motto, as I thought this would be a great way for you to introduce the company and work backwards to describe Catapult's business model. Your vision statement is unleash the potential of every team and athlete on earth. So please talk about this statement, and along the way, please describe Catapult's products and services and how it makes money.
Yeah, absolutely. I think underlying in that statement is that we believe there is untapped potential, right? And the way we unleash full potential is through technology. And so our company is a multi-solution platform for organizations, particularly professional sports organizations, to primarily unleash their potential in terms of being successful on game day. Think about sports in sort of three anchors, and I'll walk through sort of how we fit in each one of them. But the primary anchor is always the athlete themselves. So how do you keep the performance and the health of the athlete at top condition, avoiding injury, ready for game time on Sunday? Two, how do you prepare tactically for the game? So think about, how the coaches prepare for their opponents, how they scout their opponents, how they manage their tactics. A lot of video solutions in that core component. And then lastly, think of the front office, right? So how do I recruit my next wave of talent? How do I perhaps train? How do I prepare that next generation of athletes coming into it? So in those three pillars, is a multi-solution platform that Catapult brings to market to help organizations really fulfill their potential. The company's history really began in that first module around the athlete potential. And so we pioneered the first wearable device in professional sports. It's a sort of about 2 inches by 1 inch, where every once in a while you'll see an athlete take off their jersey, and underneath it will say Catapult, and behind that sort of compression garment is a small device, and in that device we're capturing about 100 different telemetry points, really out of the athlete, to understand how hard they're working in a given situation. And the reason we're looking for that is we're trying to help practitioners really keep those athletes from avoiding injury and staying at peak condition. So company pioneered that vertical. It's now moved and expanded over the years. We not only monitor athletes on the field, we now monitor them in the gym. We help bring technology that allows customers to really have a more predictive element of performance. Then we've done some acquisitions over the years. We built some organic products that around that second component around tactical analysis, where we are helping primarily the head coach, the analysts and the teams prepare footage, understand how their opponents are playing, what are the weaknesses, the sort of their strengths, and prepare for the game during the week. And so we have probably about 3 or 4 solutions in that sort of vertical. And then lastly, in the front office is really around recruitment and scouting. And so most recently, we've done an acquisition out of a company out in Germany that was really the premier analysis, sort of a data analysis company around recruitment in sort of global football, global soccer. So fingers kind of everywhere at this point. We have a deep solution in motorsport as well. If you ever walk through a paddock in Formula One, every screen at that point is a Catapult software. But it's really been a journey. I think I like to think of us as a company. We're a 20-year-old company now that is really reflective, I think, of the sports technology world overall. And so, it started with sort of how can we measure what athletes are doing? How can we take those measure and help us think tactically? How can we now use some of that to really recruit the next generation of athletes? And I'm sure it's going to continue to expand from here on out.
So you've got the device portion, and you also have the analytics layer, the scouting layer as well. And you sell this via a subscription model, correct?
That's correct. And so our subscription model is a think of it as a SaaS model with some hardware attachment to it.
Right. And so I was curious, in your subscription model, do you sort of amortize the cost of the hardware, or is that sold separately? So I buy a subscription for you for my athletic team. Is it one price for everything, or do I have a separate piece where I'm buying, let's say, 40 wearables for a small college team?
No, so the price is set by subscriptions. And in the subscription, we will do different elements to it, right? So it will be how many athletes you want to monitor. It will be how many, people are going to use the software, what types of algorithms you want to have. For example, we will differentiate on position, we'll differentiate on sports. And so the more sophisticated you are as a team, the more access to algorithms you're going to want to have. And it's a single package on it. So we typically, from a business model perspective, we bill our customers annually, and typically it's a 3-year term. The devices are included with it, and so we amortize the device through the period that they have. And in some cases, the life cycle of that device typically is around 4 to 5 years. But if we're bringing something new, we'll typically make sure that our customers are ideally having the latest and greatest of device.
Okay, so that makes sense to me. Looking at your communication with the investment community, you work with one overriding metric, which I think is very appropriate. You like to follow the growth of annualized contract value, or ACV. And as you've explained it to us, this makes sense. So with a market that seems to me big, but somewhat limited, because there are only so many like pro teams or so many college teams around the globe, maybe that you could market to, is the focus on your business sort of landing with a team and then expanding, maybe proving out your technology to them and then selling additional modules? Maybe I start with just monitoring my athletes, but by the end of the 3-year term, I really want that scouting piece. Is that how investors should think about the growth of your business? It's really increasing this ACV piece?
That's absolutely correct. And so I think the way you think about our go-to-market motion is, we have 20,000 professional teams across the globe. And so we're, while continues to see enormous greenfield opportunity from a landing perspective, right? And we're at about 3,000 or so professional teams today, and growing typically around 11 to 12% annually. But really, our core is not only to land, but to expand in terms of a share of wallet. And exactly what you said. So, we typically start a customer in, what has been our bread and butter, which is our athlete monitoring system. And then we're expanding them across multi-solutions. So, either you're expanding it through a bit more software related. So, more algorithms that they want to cover. Perhaps more hardware that they're going to look at in the gym as a good example. Now they have data on the athletes. Typically, we want to make sure that now they're understanding how that data relates to the tactics that they're preparing for. So typically, we'll cross-sell into a video analysis solution, and so on and so on. And so, the way we think about it, or it's actually not the way we think about it, but what the data shows is that every time we cross-sell a customer into a new solution, the impact that we have on that contract value on a per customer basis is pretty significant. So, the average contract value on across our business, and it's the average. So, top teams are paying significantly more, and the lower teams are paying significantly lower, is around 20,000 when you sell that wearable device. But when they cross over into a video solution, that typically goes 3x that. And when they get into a fourth or a fifth solution, it's typically 5 to 10x that. And so cross-selling is really important. The other aspect I think, really important to note in our industry, because I think everyone says, well, the industry is fairly limited in terms of, team size. But from a, expenditure size, it's not, right? It's a $700 billion industry where, about half of that is just going to athletes to ensure that they're getting the best and keeping it healthy. And as an industry overall, their expenditure in technology is behind almost every other industry. So, they're about, I think, a little less than 0.5%, where most industry today will spend somewhere between 4 to 7% of their expenditure in technology. So we think that, us being the de facto platform working through this cross-selling mechanism, really before the industry is disrupted through technology, I think will both, put us well. Not only do we have a natural way of expanding share of wallet, but as the industry gets disrupted, have some nice wins behind their sail, I should say.
Mm-hmm, mm-hmm. I was curious, what represents your biggest opportunity in terms of sports? We look at the whole field of sports. Obviously, here in the U.S. where I am, the NBA is big, NFL is big, but so is professional soccer is growing here. But globally, what represents your biggest opportunity?
Yeah, for us, it's really, I think, if you think about, sort of what are the big sports across the globe, from a budget perspective, it's American football, always pretty much right up there, global soccer, global football, primarily followed by basketball. And then you kind of have, it starts to drop off from there, whether it be ice hockey, rugby worldwide, baseball, and so on. For our opportunity from a growth perspective, if you think about landing new teams, it's really related to two areas, and I should say probably now a growing third. So the first has always been global football, soccer, and so us expanding beyond sort of Western Europe over the last few years has been really advantageous. So we've done a really great job in finding new teams, I should say, in the Nordics and Eastern Europe, Southern Europe. Latin America has been a really fantastic place of growth. Asia, Middle East at this point. So really sort of that area, primarily from a growth perspective, is really important. The second is collegiate sports. And if you're an investor outside of the U.S., I think people are always a bit surprised just how professional and how large the college sport scene really is here in the U.S.
If I can jump in here, just for one example, I follow a basketball team, my alma mater, the UNC Tar Heels. I've been amazed at the impact of the rule changes with the NCAA, which now allows college athletes to be paid the NIL structure. It's a big business.
Totally big business, right? And so for us, it's always been, not only are the big sports in college sports, like as you said, college basketball, college American football, but what we're starting to see is, the whole slew of sports within the, sort of athletic administration, really starting to take off as well, right? So that's been, a really important area for growth. So we always, we've done a fantastic job. And when you think of the big sort of 10, 15 leagues across the globe, we're there, but we've been expanding really on college and global football. And I said there's a third sort of rising wave that's happening now across the globe as well, which is women's sport. And so that has been, really, I think the level of budget that you would see in a women's sport 10 years ago, when we would sit and talk about the technology that, we had to offer, they weren't quite there. They didn't have not only the budget, but they typically didn't have the sort of the staff and the personnel to kind of utilize the technology we offered, where that has changed dramatically over the past, 2 to 3 years here. So I think one of the things to note, Asid, is that sports overall is actually in a really interesting place, I should say, at this point in time, right? So if you're an advertiser and you want to advertise to live eyeballs in any form, right? You want to capture people at the same time. There's not a lot of experiences left where we, share it in a communal sense. And so sports really become the last vestige of live entertainment. And the impact of that has meant that, third division soccer leagues, smaller college sports, women's sport overall, they've all benefited from a value increase across each of those properties. And in turn, as their value increases, they become more professional. They start to look for technology as a sort of advantage in how they can be successful. And that has benefited us tremendously.
I think that's so fascinating as we've watched linear TV disintegrate over the last several decades. You're right. I can't think of many more places where you can accumulate eyeballs in one place that share a commonality. So it's a group you can market to that have similar interests. And, of course, we've seen companies like Netflix become involved in live programming. So that supports your point. Speaking of adding value, wanted to give you guys a compliment and ask you how you arrived at this. But I noticed in your financial presentations, you focus on the idea of incremental profit. So this is something close to my heart. I'm an accountant by training, and I rarely see this in the public markets that a company discusses its fixed costs and its variable costs, and then how much more money they can make on each additional dollar of sales. So the concept for those of you who are watching goes something like this. I'll simplify it greatly. You've got fixed costs that you have to pay. You have rent, you have a payroll, insurance, taxes. You get it. And over that bar, you have variable costs that are attached to each dollar of sales. And I think Catapult really clearly shows the stack of how your costs fall out. And you do a really great job of showing investors. In fact, this goal, I'll read out loud. Our target is to keep at least 30% for every additional $1 of revenue we generate as profit. So how did you arrive at presenting this? How did you adopt this as a business principle?
Yeah. I wish I could take credit that, I woke up one day and I thought this would be a great way to present it. But quite honestly, it came from the school of Amazon, right? And so, prior to Catapult, I was at Audible for about 20 years. And in those 20 years, we got acquired by Amazon. And so I got to see how they thought about companies, how they thought about, different aspects of products internally. And one that I actually found really, really important because it really showed the reflection of scale was incremental profit, right? And so it basically the approach was always, there's going to be a level of investment that you're going to have to make to get the company to operate at a scale that allows you to get to profitability. And a lot of companies talk about that, and it's fairly straightforward. But once they've reached that profitability, rarely do they talk about, I'm investing to basically then earn more out of every new dollar that we add to the business. And Amazon was great at drilling that, into their executives while I was there. And so when I left, I think that was one of the things that I brought with me was, look, we were going to, when I got here at Catapult about 6 years ago, the company needed some investment. It was still a pretty early entrant into the market. Great product, but it hadn't quite invested in sort of integrating all of its solutions. And so I had gone to the market and I said, look, we're going to invest for a couple of years with the goal that we're going to hit this inflection point where our fixed costs are going to be just sufficient to basically then grow at sort of CPI type of rates. Our variable costs, meaning our marketing, our salespeople, will be ideally fixed and sort of, becoming more efficient over time. And she anticipate once we hit this inflection point that ideally we'll keep about, 3 cents, 30 cents of every dollar we generate. We've actually been outpacing that. So the last couple of years, we've been keeping, close to 50% of every dollar we generate, which I'm really proud. I think it's a number that I think our staff understands really well. I think while it's unusual, you're right, it's unusual for public companies to do it. I think it's been a really great way for investors to understand, what they should anticipate in the future from a profitability perspective.
Yeah. Love it. And then can you also tell us, if you're able, long term, if we can do this maybe on a GAAP basis would be easiest. What should investors expect would be a sort of stable operating margin once you really reach the size that you think you're capable of reaching? What type of returns should an investor expect out of Catapult?
Yeah, so we use a sort of a management EBITDA sort of approach, and in that we're just excluding any capitalized development, right? Somehow accountants got away with including that at some point, in EBITDA. So we kind of extract it. We say we think, look, it's real expense, and we're on it. So we treat that as sort of our profit margin. Right now, we're, I think around 15%. Our goal is to get to around 30. And I think, primarily we see that, as soon as we cross around $200 million of revenue, our anticipation is that we're going to be sitting around 30% of EBITDA. And that should be a sustainable, if not improving over time. If that variable cost starts to become even more efficient, with the advent of technology and so on. But that's our anticipation. What we're working really hard to is, as soon as we get to around $200 million of revenue, we should be dropping around 30% of profit margin to the bottom line.
Great. And just one more question while we're on this topic of the income statement and thinking about your returns. I was curious, I know that you all have made some small acquisitions in the past. You were mentioning that at the top, and that's enhanced your platform overall. But also you seem to purchase intellectual property every year. I'm not sure what this item was, and I thought, you know what? I'll just ask Will when we're on together. So you have a consistent, looks like purchasing of some intangibles each year. What is that, and how does it contribute to the value of the company?
Yeah, we're not purchasing it. It's I think we've done an acquisition about I believe 4 years ago. We did, and then I think one earlier in 2025, and then one in late 2025. But the way the accounting happens is that there's some accounting that gets amortized into that intangible over the years, and I think that sometimes it gets counted. But from an acquisition perspective, we've really been focused on initially on how do we make the platform stable and strong. And so we did an acquisition 4 years ago of a company called SPG. They were the primary de facto technology for Formula One. And this was, I think we acquired them right before the Formula One craze happened. And so, I don't know if we would have been as successful on that acquisition as we have been. But they had built a really fantastic platform where they were capturing about 1,000 different telemetry points of the car in every millisecond. They were combining that then with wind speed and air temperature and track temperature, and they were doing about 2 million predictions of what was going to happen in a given race. And the teams were primarily using their technology to basically create what-if scenarios and understand, what should be their tactics based on all of this volume of data that was coming in. The reason I share that is that, the first acquisition that we did was really buying them because we saw that technology being core to our platform. We wanted to capture a lot of data from athletes. We had already created a lot of data. We wanted to combine that data with real-time video feeds and other components, and then primarily bring that back into the teams to help them make better decisions. Last year, we did 2 other acquisitions. And actually, we did 3 acquisitions. One of them is fairly small, but they were really around expanding how much data now I get from customers, right? So adding solutions from a data perspective and introducing scouting and recruiting in sort of that 3-pillar view of sports, so that we had a complete view of the workflow of a sports team. But that's essentially sort of our strategy around acquisitions has really been either it was a platform enhancement, which we're pretty much done at this stage, and now it's really around, is it expanding our workflow ownership, or is it expanding data that we collect related to the customer.
Mhm. And now that you feel that you have sort of a complete offering on the platform, I was curious, do you have any competition that offers the same breadth of services? Who should we think about when we think about the competition for Catapult?
Yeah, our competition is a little bit fragmented because I think there's not a lot of solutions out there that has the level of breadth of what we have across these three sort of verticals, that I've talked about. What we find is that we will have competitors that are, in some cases, with some strength in each of the verticals themselves. I think probably the one that most people could sort of associate because they've had kids in high school playing some kind of sports is a company called Huddle. They've done a video product that's been really sort of a big business in the high school market, and they've done some acquisitions to kind of bring themselves into the pro market. Sony, as another example, has done some acquisitions in professional sports, really with the view of how does it help them create some media business. But both of those in the pro space still don't have the breadth of what we've created around athlete monitoring. And in that space, we're really the de facto leaders by miles. I think we've captured at this stage since the first device went out a little over 5 petabytes of data around athletes. And so, for somebody to come in now and kind of get that breadth, both on, kind of bring it into the tactical and the recruitment side, is going to be, pretty hard to do because not only do you have to get the hardware out, you then have to track it for, a number of years to really understand how to make sure your algorithms are providing the right set of data.
Mm-hmm. Between the hardware piece and the algorithms and the data, it seems like you all have some insulation from all this AI disruption that is hitting many SaaS business models. All the same, I did want to ask you about any risks that you'd want an investor to be aware of with your business. And also in the same breath, while we're talking about AI, I was just curious how you all use AI at the company.
Yeah, look, I think we find ourselves at an incredibly fortunate position as it comes to not only being a SaaS business, but in the I would say in the vertical or category we operate. So I think first and foremost, right, our industry as a SaaS business is not getting disrupted by AI, right? So who we serve, athletes and teams, really are we don't anticipate AI showing up on the pitch or on the ground anytime soon. So we find ourselves insulated as an industry overall. I think too, we have been, as I said now a minute ago, we have been the primary source of data creation, right? So all of the devices that our athletes have, all of the things that we're capturing in the gym, all the things we're capturing in our video product, is really the underlying data set that AI needs to then utilize that to, primarily create some algorithms and answer, questions that a practitioner might have. And then, I think we feel very insulated given those two components to it. I think internally from us, we really don't see a ton of risk. I think the initial risk that, I think we've approached AI with was really, would our customers, not necessarily competitors, but would our customers want to basically create their own, software solution, their own end, user endpoint as a technology, and really, I think what we have discovered at this stage is, while there's some desire to customize certain aspects of the software that we offer, the benefit that they get from the network effect of us capturing data across teams, across leagues, across sports is very significant. And so while they could maybe look at something that's related to their team, the algorithms that we offer from a data perspective, as what is a striker in global football looks like, not just in the EPL, but how does it look like across the top 20 leagues across the globe? How does it look like from different age groups? is something that's really unique to us. So I think the danger for us was really around, sort of that customization desire that I think almost every company organization has, but the ability for us to kind of have a network effect related to that, I think has really tampered that down. Internally, I think we're sort of very similar to, I think, most other organizations in sort of the SaaS industry, where there's two ways to approach it. Obviously, you could use AI as a value, sort of creation technology for your customers, and then sort of a P&L efficiency, right? So how do you make your operations more efficient? We're using it in both. Internally, we have found that our fixed cost, as we were talking about before, has actually not grown very much over the past few years, primarily because in the last 18 months we've really deployed AI to kind of help manage to do more and more, to manage the productivity of our workforce, I should say. And then in the value creation aspect, we've been utilizing AI, and I think it's AI sort of the latest iteration from a nomenclature perspective, right? So you go back a few years ago, people say machine learning, and you go back a few years ago, and so on. We've been utilizing that to create a ton of our algorithms over the years. I think we utilize computer vision, for example, to help refereeing, help race control systems, in seconds understand violations of rules. So our ability to tap into the technology just continues to accelerate the amount of solutions we could create and the improvement of ultimately of our software.
So, Will, at this point, I'd like to ask you to dream with us a bit and look forward a few years, maybe 5 or 10 years, maybe further. My question for you is, given the market, that it's not as small as it seemed, maybe at the beginning of this conversation, and the fact that sports teams spend a lot of money on being competitive and on their athletes, how big a company do you think Catapult could be? Or what's your vision now? You are a thriving, smaller business. Ultimately, what does this business look like in terms of size?
Yeah, look, I think it depends on how we think about the horizon, right? So I always say in 5 to, let's call it 5 to 10 years, my goal is to get this company to, be $1 billion in revenue, and in that sort of, 30% sort of profit margin. I think that would be a very successful next few years for us in terms of, how we generate growth, primarily through that wallet expansion over time. There's nothing in sort of the way I think about it that, in 10 plus years time, that this business is not a $10+ billion revenue generating company. I think if you look at the market overall, as I said, it's a very significant size market. We have a very significant market share in terms of being the first to market in terms of sports technology, and our ability, I think, to expand the share of wallet with all the solutions we're bringing in, I think is very material today. And so, I would say, when I took over the company, it was making, I believe, around 30 or 40 million. And I kind of said, look, in due course, we're going to be, very easily about 100 million. And I think people thought, like the company's been around now for 17 years. I don't think that's going to happen. I think that's passed. A few years ago, I said, our next milestone is to get to 200 at a 30% profit margin. I think people feel they could touch that today, and they believe it. But I think in 5 years' time, I anticipate, we're very well closer to that $1 billion target. And I think in 10 years' time, I'd like to see us closer to that $10 billion target.
So ambitious goals, but you have certainly a strong foundation to get there. I wanted to end just asking you about the culture. Please describe the culture at Catapult. Maybe we'll start with what's worked, what's been successful.
Yeah, look, I like to say, the culture of Catapult in many ways has been reflective of the people we serve, right? The sports teams we serve. And so that means that, internally, our team tends to be incredibly passionate about what they do. They're incredibly passionate that, what we deliver on a daily basis to our customers, has a significant impact into the overall entertainment culture, right? One of the things that I love to see when we do all hands is people really talking about the success of the teams we support, and really understanding that that success many times pauses the world, in terms of billions of people, right, in watching. And I think we take great pride, even though we play, maybe a smaller role in driving success. I think we take great pride in it, and I think that pride has led the culture to be not only just ambitious, but really owners. And I think I think if there's one component of our internal culture, is really that across the board, people understand what matters for us as a P&L perspective. They know what matters to our shareholders. They are shareholders. And whether it's I walk into the kitchen and I don't like that something is dirty, as much as I hear that a customer is dissatisfied. I think everyone reacts like they're owners at all points in the organization. I'm really proud of that.
So you've come a long way. My last question is, where do you want to see it improve? What are your goals to enhance what's already good in the culture at Catapult?
Yeah, I think I would say in being in a company in the past that transitioned from being sort of a smaller organization to we went from maybe 50, 60 people to by the time I left, Amazon was close to 500. I think they're now over a million employees. It's really that it's hard, I think, for that early group of people to imagine really big scale. And I think if there's anything in our culture that I think not that I fight with it every day, is just really make sure that they believe that this business that a lot of people have had the fortune to be involved in sort of very very different aspects from very early days. Sometimes those early entrepreneurs can't quite yet see that we're going to be a $10 billion company, and what does that look like, right? And I think sometimes even for them it feels too ambitious. And so I think if I could marry the passion of ownership with also the grand scale ambition in terms of where the company goes, I think we're going to be well on our way. And I think we've done already a really good job in sort of turning the company into believing that, but I think there's probably a little bit of ways to go still.
Will Lopez, that is so resonant with Motley Fool culture, because we are always trying to have our members understand that if you find truly great companies and hold them for a very long time, sometimes it's an exercise of the imagination to know what can happen and how great that investment can be. So I really love that you ended on that point. And what a fascinating introduction to Catapult Sports. We'll be very excited to follow your progress. And I thank you so much for your time today.
Thank you. I really appreciate you taking the time as well.